Buying your first home is a dream for many, but for most people, the journey toward homeownership can feel overwhelming. With skyrocketing property prices, down payments, closing costs, and unexpected expenses, the thought of saving enough money to buy your first home might seem like an impossible task. But with careful planning, discipline, and smart financial strategies, you can turn this dream into reality. Set a clear savings goal. The first step in saving for a home is to establish a clear savings goal. Most first-time home buyers aim for a 20% down payment, as this helps you avoid private mortgage insurance and may also result in better loan terms. For example, if you're aiming to buy a $300,000 house, you will need $60,000 for the down payment. However, some mortgages, like FHA loans, allow you to put down as little as 3.5%, which means you would only need $10,500. To set a realistic goal, research the housing market in your desired area, determine what you can afford based on your current income and expenses, and add in extra costs such as closing fees, home inspections, and moving costs. Having a specific number to aim for makes saving much more tangible and gives you something concrete to work towards. Create a dedicated savings account. Once you have your savings goal, it's crucial to separate your home savings from your everyday spending money. A dedicated savings account for your home fund will help you avoid dipping into these savings for other expenses. Consider setting up a high-yield savings account, which offers better interest rates than traditional savings accounts. For example, online banks like Ally, Marcus by Goldman Sachs, or Discover offer competitive interest rates that can grow your savings faster. If you're serious about avoiding temptation, make this account slightly harder to access by choosing a bank where you don't have a debit card or direct access to cash withdrawals. This makes it more likely that you will leave the money alone. One of the most effective ways to build your savings is to automate the process. Set up automatic transfers from your checking account to your savings account as soon as you get paid. By doing this, you're treating your savings like any other monthly bill, ensuring that you save consistently without relying on willpower. For example, if you get paid every 2 weeks, you could automate a $500 transfer into your home savings account, which would amount to $13,000 saved in 1 year. Even if you can only afford to save a smaller amount, the key is consistency. Over time, these automated contributions will add up, and you won't even have to think about it. Cut unnecessary expenses. To boost your savings, it's essential to review your monthly expenses and cut out anything that isn't necessary. This might mean sacrificing certain luxuries in the short term to achieve your long-term goal of home ownership. Start by tracking your spending using budgeting apps like Mint or Inab, which can help you identify areas where you're overspending. For example, consider cutting back on dining out, reducing your entertainment budget, or canceling subscription services you rarely use. If you spend $150 a month on dining out, cutting that in half could save you $900 over 6 months. Every little bit adds up, and by redirecting these savings towards your home fund, you will reach your goal faster. Take advantage of employer programs and government incentives. Many companies offer employee benefits that can help you save for your first home. Some employers offer matching contributions for savings programs or even down payment assistance. Check with your human resources department to see if your company offers any such benefits. In addition to employer programs, there are several government programs designed to help first-time home buyers. For example, the Federal Housing Administration offers loans with low down payments, while Fannie Mae and Freddie Mac also have first-time home buyer programs. You can also look into state-specific programs that offer down payment assistance or grants to help you get into your first home. Be sure to research these options, as they can significantly reduce the amount you need to save up front. Consider downsizing or renting cheaper housing. One of the best ways to speed up your home savings is to reduce your current housing costs. If you're renting, consider downsizing to a smaller, more affordable apartment or moving to a cheaper neighborhood. The money you save on rent can be directed towards your home savings fund. For example, if you're currently paying $1,800 a month in rent, moving to a place where you pay $1,200 a month would save you $600 a month, or $7,200 a year. This might require some sacrifices in terms of space or location, but it's a temporary measure that can accelerate your savings. Increase your income with a side hustle. Another effective way to save for a home is to increase your income by taking on a side hustle. Whether it's freelance work, driving for a ride-sharing service, or selling handmade goods on Etsy, having an additional income stream can significantly boost your savings. For example, if you drive for Uber or Lyft part-time and earn an extra $500 a month, that's $6,000 a year that you can put directly into your home savings account. The gig economy offers plenty of flexible opportunities to earn extra money on the side without committing to a second full-time job. Pay down debt. While it may seem counterintuitive to focus on paying down debt when your goal is to save for a home, reducing your debt can improve your credit score and increase your borrowing power. Lenders look closely at your debt-to-income ratio when determining how much you can borrow for a mortgage. By paying down credit card debt, student loans, or car loans, you improve your financial health and increase your chances of getting a better mortgage rate. Start by focusing on high-interest debt, such as credit cards, and consider using methods like the debt snowball or debt avalanche to pay it off. Once you've reduced your debt, you will be in a much better position to qualify for a mortgage, and you may be able to borrow more with a lower interest rate. Save windfalls and bonuses. Any extra money you receive throughout the year should go directly into your home savings fund. This includes tax refunds, work bonuses, or even monetary gifts from family members. Instead of using this money for discretionary spending, put it towards your goal of buying a home. For example, if you receive a $3,000 tax refund, that's a significant boost to your down payment savings. Treat any financial windfalls as an opportunity to accelerate your home buying timeline rather than an excuse to splurge. Stay motivated by visualizing your goal. Saving for a home can feel like a long and difficult journey, but staying motivated is key. One effective way to keep your eye on the prize is to visualize your future home. Create a vision board with pictures of homes you love, or use apps like Zillow and Redfin to browse listings in your desired neighborhoods. Visualizing your goal can make it feel more tangible and keep you motivated to continue saving. You can also set smaller milestones along the way to make the process feel more manageable. For example, celebrate when you reach 10% of your savings goal, then again when you hit 50%. Breaking the goal into smaller steps makes it feel more achievable. Saving for your first home requires patience, discipline, and strategic planning, but with the right approach, it's entirely possible. By setting clear goals, automating your savings, cutting unnecessary expenses, and exploring government incentives, you can steadily build your home savings fund. Increasing your income through side hustles, downsizing your current housing, and paying down debt can also accelerate the process. Remember, the journey to homeownership may be long, but the reward is worth it. With careful financial planning and smart savings strategies, you will soon be unlocking the door to your very own home. Knowing that every dollar you saved brought you closer to achieving this major life goal. ChatGPT can make mistakes. Check important info.